Hey everyone, welcome back to the channel. Today we're diving into something that's affecting millions of people across the country and even the world. Maybe even you watching this right now. We're talking about the housing crisis, and that's making it harder and harder for regular people to afford a place to live. The numbers are staggering. Average rent prices have climbed over 25% in many major cities since 2020. Home prices up more than 40% in the same period in some markets, and wages, well, they haven't kept pace, not even close. But here's the thing, this isn't just happening randomly. There are specific forces creating this perfect storm, and understanding them is the first step to protecting yourself financially. By the end of this video, you'll understand exactly why housing has become so unaffordable, who is actually benefiting from this crisis, and most importantly, what practical steps you can take to survive and even thrive despite these challenges. If you're struggling to make rent, feeling like homeownership is slipping away, or just concerned about your financial future in this economy, this video is for you. Now let's get into it. Before we dive into the causes, let's make sure we're all on the same page about how serious the situation really is. For example, if I make $65,000 a year in my tech job, but I'm still spending over 50% of my income on rent for a one-bedroom apartment, or another example, we've been trying to buy our first home for 2 years now. We keep getting outbid by cash offers $50,000 over the asking price. These aren't isolated cases. According to the latest data, nearly half of all renters in America are now cost burdened, meaning they spend more than 30% of their income on housing. And the dream of homeownership, it's becoming exactly that, just a dream for many. The median home price in the US has reached nearly $400,000, putting it out of reach for most first-time buyers. But here's really what's interesting. This isn't just happening in traditionally expensive cities like New York and San Francisco anymore. It's spreading to places that were once considered affordable havens. Places like Boise, Idaho, saw home prices increase by over 70% in just 3 years. Austin, Texas, rental prices up nearly 40%. Phoenix, Arizona, home values nearly doubled. So what's actually causing this nationwide affordability crisis? Let's break it down. At its core, the housing crisis comes down to the basic economic principle of supply and demand, but with some very specific twists that have created this perfect storm. First, let's talk about supply. The simple fact is, we're not building enough homes. After 2008, the financial crisis, housing construction plummeted and nearly never recovered. Experts estimate we're short anywhere from 3 to 5 million housing units nationwide, and this shortage didn't happen by accident. In many areas, strict zoning laws make it illegal to build anything except single-family homes on large lots. These restrictions were often created decades ago with exclusionary intent, to keep certain neighborhoods wealthy and homogeneous. Today, these same laws make it nearly impossible to build the kind of dense, affordable housing that's desperately needed in high-opportunity areas. But it's not just zoning. Construction costs have skyrocketed due to labor shortages, supply chain issues, and inflation. The average cost to build a new home has increased by over 30% since 2020. Now let's talk about demand. Several factors have dramatically increased competition for housing. First, demographics. Millennials are the largest generation in American history, are in their prime home buying years. That's millions of people all trying to buy homes at the same time. Second, remote work. The pandemic created a massive shift in where people can live. Suddenly, workers from high-cost cities could move to more affordable areas while keeping their big city salaries. This created what some call Zoom towns, previously affordable areas that saw massive price increases as remote workers flooded in. Third, and this is crucial, investor activity. Wall Street has discovered housing as an investment class in a big way. Large institutional investors like private equity firms and REITs have purchased hundreds of thousands of single-family homes, often paying cash and above asking price. These properties are then converted to rentals, removing them from the for-sale market permanently and increasing competition for what's left. In some hot markets, investors now account for nearly 30% of all home purchases. So we have severely restricted supply, meeting unprecedented demand. But there's more to the story. We need to talk about what experts call the financialization of housing. the process by which housing has been transformed from a basic need into a financial asset. This shift has fundamentally changed how housing markets function. Let me explain. For decades after World War II, housing was primarily viewed as a place to live, a home. Yes, it was an investment, but that was secondary to its primary purpose of providing shelter. Today, that relationship has flipped. Housing is now seen primarily as an investment vehicle, with its role as shelter becoming secondary. This isn't just happening in the US. Globally, residential real estate is now worth over $250 trillion, making it the largest asset class in the world, bigger than all the stocks and bonds combined. This financialization has several important effects. First, it disconnects housing prices from local incomes. When housing is viewed as an investment, prices can rise far beyond what local residents can afford. Second, it creates perverse incentives. Political leaders often celebrate rising home values as a sign of economic success, even as those same increases make housing unaffordable for many. Third, it concentrates wealth. As housing prices become more expensive, those who already own property gain wealth, while those who don't fall further behind. The wealth gap is increasingly passed down through generations, with parental home ownership becoming one of the strongest predicators of whether someone will ever own a home themselves. And finally, it changes policy priorities. When housing is seen primarily as an investment, policies tend to focus on protecting and increasing property values rather than ensuring affordable housing for all. So we have a severe supply shortage, unprecedented demand, and a system that increasingly treats housing as a financial asset rather than a basic need. Now let's talk about what all this means for you. No discussion of the current housing crisis would be complete without talking about inflation and interest rates. Coming out of the pandemic, we experienced the highest inflation rates in over 40 years. This affected everything, from groceries to gas prices, putting additional pressure on household budgets. But housing costs are actually the single largest component of inflation measurements, making up about a third of the consumer price index. In response to this inflation, the Federal Reserve aggressively raised interest rates. This had a profound effect on the housing market. Mortgage rates more than doubled in just 18 months, going from around 3% to over 7% at their peak. This dramatically increased the cost of financing a home purchase. Let me show you what this means in real dollars. For example, a $400,000 home with a 20% down payment. At 3% interest, your monthly payment would be about $1,350. At 7% interest, that same house would cost around $2,130 per month. That's nearly $800 more each month, almost $10,000 per year for the exact same house. The interest rate shock created what some economists call the lock-in effect. Homeowners who secured low rates during the pandemic became so reluctant to sell because doing so would mean giving up their favorable mortgage terms. This further reduced the supply of homes for sale, keeping prices high despite the higher interest rates. For renters, the situation wasn't any better. As potential buyers were priced out of the purchase market, they remained in the rental market, increasing competition for apartments and driving rents higher. Meanwhile, landlords faced higher costs themselves, from property taxes to maintenance expenses. They then passed these increases on to tenants, and the result? A housing market where both buying and renting had become increasingly unaffordable for average Americans. So now that we understand the forces creating this crisis, let's talk about what you can actually do about it. Because despite these challenges, there are strategies that can help you navigate this difficult housing market. First, if you're currently renting, know your rights. Many cities and states have enacted rent control or rent stabilization laws that limit how much your rent can increase. Research the specific protections in your area. Consider negotiating with your landlord. If you've been a good tenant, they may prefer keeping you at a slightly lower rent than risking vacancy or finding a new tenant. Look into income-restricted housing options. Many cities have programs for middle-class earners that offer below-market rents, but they're often under-publicized. If you're hoping to buy a home, be strategic about location. The most severe affordability crises are concentrated in certain markets. There are still areas where housing costs align more closely with local incomes. Consider alternative financing options. FHSA loans allow down payments as low as 3.5%. Some states offer first-time homebuyer assistance programs that can help with down payments or closing costs. Look into less traditional housing types. Condos, townhomes, and manufactured homes typically cost less than a single-family homes while still providing ownership benefits. For everyone, focus on increasing your income. In a housing market disconnected from local wages, traditional advice about keeping housing costs below 30% of your income may no longer be realistic in many areas. Instead, developing in-demand skills or starting a side hustle can help you keep pace with rising costs. Build community. Consider co-living arrangements or house sharing to reduce costs. Many people are finding creative ways to share housing expenses while maintaining privacy. And finally, get politically active. The housing crisis is ultimately a policy problem that requires policy solutions. Zoning reform, increased public investment in affordable housing, and tenant protections are all areas where citizen advocacy can make a real difference. Remember, this crisis didn't happen overnight and won't be solved overnight, but understanding the forces at work is the first step to protecting yourself and working towards solution. So what does the future hold? It is just a bubble that will eventually burst, bringing down prices back to earth? Most housing economists don't think so. Unlike the 2008 crisis, today's high prices aren't driven by subprime lending or speculation built on shaky financing. Instead, they're driven by fundamental supply and demand imbalances that will take years to correct. The good news is that we're starting to see some positive changes. Construction of new housing units has increased, though it's still below what's needed to close the gap. Many cities are reforming zoning laws to allow more housing types in more neighborhoods, and there's growing political recognition that allows housing affordability as an economic issue affecting millions of Americans. But these changes will take time to translate into more affordable housing markets. In the meantime, the most important thing you could do is make informed decisions based on your specific situation and goals. Whether that means finding creative ways to reducing your housing costs, building additional income streams, or relocating to a more affordable area, the key is to be proactive rather than reactive. The housing crisis we're experiencing isn't just about real estate. It's about the changing nature of our economy and society. Housing is fundamental to our sense of security, our financial health, and our ability to build the lives we want. By understanding the forces that have created this crisis, you're already ahead of most people in preparing for the challenges ahead. I hope this video has given you not just information, but also practical strategies to help navigate these difficult times. If you found this helpful, please hit that like button and subscribe for more content that breaks down complex economic issues into actionable information. And let me know in the comments, how has the housing crisis affected you? What strategies have you found helpful in dealing with rising costs? Thanks for watching, and remember, knowledge is power, especially when it comes to something as important as housing. See you in the next video. Take care.